morning. It is week 15 on the 36-month Forex trading challenge, and as you can see, I'm still in bed. I've had a terrible weekend. Been ill pretty much all of the weekend. Feel dreadful this morning. Didn't do any of the market analysis at the weekend. Not got up this morning. Makes me think that really, what is wealth? Well, your health is your wealth, because just not feeling good at all. Cold type stuff, stomach, can't seem to get rid of it. Was at the hospital last week, ironically. Had some bloods done as well, so if there is something wrong, hopefully the doctors will find out. But what that means is that from a psychological point of view, difficult place, not great when you feel under the weather. To be upbeat and to be energized and to be motivated to do what you need to do. The trades that I have on are still playing out. I've just kind of had a quick look at those now, but I'm not doing anything specific. It means I missed my analysis today. It just means that everything that you normally do when you feel good is kind of falls by the wayside, and you kind of feel disorganized, which I never like to feel, and undisciplined. But hey ho, this is the warts and all review. This is the warts and all documentary, if you like, of this challenge. And hey ho, in the space of a 3-year challenge, you're going to get sick, and you're going to have that challenge to deal with. So yeah, going to have a bit of a rest now, and get up a little bit later, and see how I feel, see whether it's see whether I've got the energy then to do what I need to do, and to do the analysis that I should have done at the weekend. Okay, so it's about 11:15. Finally got up, feeling dreadful still, but yeah, I need a shave as well. Goodness me, feeling dreadful still, but got to crack on. So I'm going to do what I should have done yesterday. Jump into the charts now, do my analysis, and see where we are. Okay, so it's 6 o'clock on Monday evening. Feeling much better. Just hosted a call for ICAW Business Committee, which is why I'm in the shirt. Conference call online, and just got off that call now to check the 6 p.m. close. Been quite a lot going on in the last few days. Not been well, of course, which has meant I took my eye off the ball. Managed to get all my weekly market analysis done this afternoon, and yeah, I've tidied up the charts, so my charts are only displaying current positions that I'm in. So lost a little bit of the audit trail there, but hey ho, doesn't really matter. So what I'm going to do now is jump in the charts and just give a quick overview as to the positions that I'm currently in at the start of the week. So the first trade I'm in is US dollar short, yen short. In fact, what did I say? US dollar short, US dollar Japanese yen short. And yeah, basically got in here. We gapped down here and traded up through this gap today, but failed to close above the 200 simple moving average. If I jump out to the bigger picture here, you can see that this is a downward trajectory on the daily chart. There is a chance we're going to close above the 50 simple moving average today on the daily chart, but I think the pressure is still down on this pair. If I go back to this chart, the 240 chart, my trading time frame, there's nothing to do at the moment. The only thing that I would need to do is to start to lighten up on this position, but don't have any signals to do that as yet. And it's reassuring to see that this is held. The last time this held, of course, we traded down, and you know, there's a possibility we could trade down further, particularly given the fact that the daily 50 simple moving average, the pink line, is pointing downwards, and we are testing that. If we get a close below that at the end of the day, in the next, what would it be, 4 hours, then that's a really good sign for further downward momentum. Second trade that I'm in, US dollar CAD. Again, one of the frustrating trades that hasn't really gone anywhere too much. So yeah, if I look at the daily charts, you know, this is all upward momentum. We've closed above the daily 200 simple moving average. This was on a really bullish candle. We've held that, and looks like we're going to hold that today. Traded down a little bit, trading under my entry here. Once I got in, we traded above, which means my stop pressure exit signal is invalidated now, which means I'm just going to hold now unless I get a signal to lighten up, which is the 10 EME crossing over the 30 EMA. That will be the first signal to lighten up on a third of my position. Next up into the synthetics, Euro Japanese yen, entered here. We traded down, had some pushback up, but again being held by the 50 simple moving average on the 240 chart, which is a good sign. On the daily chart, we're under the daily 10 exponential moving average, the 50 simple moving average, and the 200 simple moving average. So I think there's a good possibility we're going to see more downside momentum, but time will tell. This trade has been in a decent amount of profit. We got 50% of the way towards my initial target. What I decided to do then, particularly as the 50 simple moving average had positioned itself underneath my entry signal, I've moved my stop to entry, so this is a risk-free trade. Into the commodity synthetics, Australian dollar, New Zealand dollar, I entered here. This was on a trend trade, closed below the 200 simple moving average, within traded sideways. I would have had to exit this position if we had closed back above the 200 and also closed above my stop pressure line, which is the turquoise line. That stop pressure line has held, and we've seen a close back below the 200 simple moving average, which, despite the pressure today, is reassuring to the downside. This is a little bit of a dangerous trade, and if I look back at why I took this trade, it was probably a little risque. If I go to the daily chart, you can see that the daily 50 simple moving average is here. That could provide some bidding if we get down to there. So I may need to take off an initial target there, or at least roll my stop. But for the moment, the momentum is still down and quite a distance to run. But we'll see if this 200 simple moving average holds. The other trade I have on in the commodity synthetics is CAD Japanese yen. Again, short. Been under a little bit of pressure today, but the levels are still holding. No signal to line up on any of my position. The pressure looks to be down. Oh, sorry, wrong one. CAD JPY. There we are. The pressure looks to be down on this pair in terms of the daily trend line, in terms of the weekly trend line, and no reason to do anything at the moment. There is a really good chance we're going to get down to this level. We're underneath all of the 200 simple moving average, the 50 simple moving average, and the 10 exponential moving average on the daily chart. So this could be short-term bids that are going to get eaten up tomorrow when the market trades down and hopefully hits my initial target. And then finally, a new strategy that I'm looking to play on the weekly charts. What I've noticed is on the weekly chart, you have the SIG level ones, as I call them, which is the 5, 3, 10-year, 3, 5 and 10-year high, 3, 5 and 10-year low. And often when we get to these levels, you see a bounce on these levels up here. Yeah, up here, 10-year high, boom, traded down. This one perhaps not as uniform as some of the others, but anyway, what I've done here is I have put a 50 pip stop below the low of this candle. The rule is that if price tests and rejects one of these levels, and it's on a signal candle, i.e. where there's an X, a Z, or similar, then I would buy, as in this case, buy this particular candle on a trend kind of reversal, but I call it a SIG 1 trade. So just going to look to hold this as much as I can. I've got an alert here. This is when we get to a position where this 50 simple moving average is on the weekly chart. That's going to give me just short of, in fact that signal is set at a 2-to-1 reward to risk ratio. This is a longer term play. I'm just going to look at this on the weekly charts every week. I'm not going to worry about it. It doesn't form part of my risk parameters on a day-to-day basis. This is a long-term play based on the long-term time frame. This is Australian dollar CAD. I've got a similar trade on here with Australian dollar US dollar. If I can find that, where are we? Yeah, here we go. It's a similar trade. Correlation risk rules apply. So I've got 2 Australian dollar longs. I can't have any more. And what I'm doing on these trades, because they're longer term plays, I've doubled my risk on each of these trades. So yeah, where I am with this is I'm going to hold this as long as I can. 2-to-1 reward risk ratio would take me just shy of the 0.7000 handle and underneath the 50 simple moving average, which is sloping down. So I'm going to hold this. We've been holding this level for quite some time now. We're now in a range mode as I've identified it. So yeah, a little bit of pressure here, but this Z candle still holds. This was last week's close, so I'm going to hold this trade as long as I can, and see if we can't hit that target for a nice 2-to-1 reward to risk ratio. Doesn't mean I'll take the position off there. I'll look to review what's happened and yeah, move the stop or tighten the stop, or take off a proportion of the position at that point. It is bright and early, beat the alarm this morning. It's not even 5:45 as yet, but was lying in bed, kind of not sleeping, so thought I might as well get up. Feeling a lot more energized, a lot more motivated today. Not 100% sure why. I'm feeling a lot better. That could be one of the reasons, and just want to get on it and at it. Yesterday I spent quite a lot of time getting back in the groove, getting back into the discipline, and I think that's helped with my motivation getting up today, knowing that I am prepared and that I am ready for the day ahead. I've also started a new regime in the morning. I'm now taking Manuka honey, high strength antibacterial honey, which is supposed to have really good health benefits. So I've done that for a couple of days now. It's actually quite nice. It doesn't look great, but it's quite nice. So I'm going to see how that pans out. Extremely expensive stuff though, so it's got to be worth the money. But I'll monitor that over the next couple of weeks. But that's the new regime, new start to the day. Water and coffee to come, and then into the market to do the morning market analysis. So it's Wednesday and it's 8:30 p.m. Don't know where the day's gone. Completely got away from me today. Did the morning market analysis, managed the trades, etc. But for whatever reason, completely forgot to turn the video on, and probably because not a lot is happening. This is probably one of the most frustrating periods that I've ever had in the Forex markets. Just sideways action, no picking of a direction, just small moves back and forth, without the market deciding which side to pick. So not quite sure what's going on, but you never are in the currency markets, and just got to stick with it. This is a real test of, I guess, a real test of faith and a real test of discipline, test of patience. Not to change anything up too much or try and reinvent the wheel, but just to stick to the game plan. So tomorrow is a new day. I'm out and about tomorrow from early on, so it's going to be on the move, but given what happened today or what didn't happen today, then probably not too much to worry about. But I'm just hoping that you know, the market kind of picks a direction in whichever currency pair. The way you make money in this business is catching a trend, and you have to be in enough trades and survive enough trades to catch that trend, in my opinion. But with no trends developing, it's very, very difficult indeed. And the whipsaw of the market, it's going to hurt. It's going to hurt psychologically. It's going to hurt financially. So I'm sticking with it, sticking to the game plan. And tomorrow is but another day. It is Thursday morning and up bright and early to do the market analysis. Yesterday, very quiet day, very quiet overnight. A lot of the currency pairs I trade seem to be trapped between the simple moving averages. So on the 240 chart, they're trapped between the 250 simple moving average, so unclear on their direction. And what I tend to find, what I'm finding as well, is that they're quite restricted in terms of movement outside. If they close above or below and get to one side of those, they're quite restricted in terms of room to go, what I call room to go on the daily chart, due to support and resistance on the daily in the form of simple moving averages. So it's difficult. It's very, very difficult at the moment, and I'm sure when I look back on this video in time to come, I will remember this time, but perseverance is the key. I've just entered a long position on my Golden Gate strategy in Euro Swiss franc. That is kind of, well, playing out. We'll see where we go to. Fairly tight stop on that, and today we're off to Birmingham to the NEC. To Grand Designs live as part of the house planning, so we need to go and look at kitchens and this, that and the other, so that should be quite interesting. Yeah, I'm just going to leave these trades to play out. It means I'm not going to be able to check in at the usual 10 o'clock, 2 o'clock. Probably the next time I look at this, look at the charts will be 6 p.m. tonight, but that's possibly a good thing. With not a lot moving, there's not a lot of point sitting here and watching. I've got the phone that'll alert me if any targets are hit, so I can move my stop to entry. But aside from that, I'm going to enjoy the day and try and stay calm. Was the Grand Designs event today down at the NEC in Birmingham, which is really good. And ironically, while I've been out and about, the market has been busy. And as I've just shown, news that a Brexit deal or agreement between the UK and Ireland about the Irish border might be in play, which sent a spike, which I'm just looking at now, in pound US dollar, basically all pound pairs. Now this was bad in my what are we looking at here? In my trend short, but good for my SIG 1 long. So I was playing this pair in both directions. So I'm out of the short with a measurable loss within my risk parameters, and I'm still in my long, which is a longer term hold, which I trade now on the weekly chart. So if a Brexit deal does come off, then I'm in a good position to capitalise. But as always, you never know. So yeah, I'm going to pretty tired now. So I'm going to switch these off. I'm going to get up tomorrow morning, switch the charts off, get up tomorrow morning early, look at things with a fresh pair of eyes, and see what opportunities are available then. It's Friday lunchtime, around about 1 o'clock, 5 to 1. One of the benefits of being at home is I can go and check the news. Not that I trade the news, but yesterday in the pound, news that a Brexit deal might be on the cards sent the pound, spiked in the pound, and that trend has continued today, so quite interesting. So just keen to keep abreast of the news and see what's being said. It is whipsaw, so somebody could come along to say, well, actually, it's not going to happen now, the Brexit deal, and things could reverse. I'm sporting the green velour tracksuit, which is fast becoming the lucky tracksuit, I would guess. And the reason I say that is put on a trade this morning in Euro US dollar, hit targets, put on a trade in Australian US dollar on its way to target, and overnight my Euro Swiss franc long hit targets. So after the period of drawdown that I experienced last month, and I need to still publish those results, just finalising those, then yeah, this month is looking a lot better. And I think after you have a number of losing trades, probability states you can have a number of winning trades, and it's about what you lose when you lose versus what you win when you win, which is what I talk about all the time. So I want to stick on the news, see what's happening, and have some lunch. it's Saturday afternoon around about 10 to 5, and I'm going to record a quick video now, hence the microphone out, just in terms of the trades that I'm currently in. It was a much better finish to the week, a number of positions doing well, but it is a tough time still in the markets, and I think we're going to get more news on Brexit next week. I am long the pound. I've played the pound both ways. I was wrong on my short in the week, but right on my SIG 1 strategy in terms of the long position, which I trade on the weekly charts. But who knows what could happen, but you have to be in it to win it. So I'll jump into the charts now, do a quick review, and round off this week's video. So first up into the weekly charts. This is my new strategy. I call it SIG.1 or SIG 1. Basically, it involves me buying or selling on candle signals that appear at 10, 5 or 3-year highs or lows. So basically bought the pound here. This was the entry signal, but got in a few weeks late. Basically, we traded up, trended down, or traded down, I should say. So I got in here. At the end of last week, we were about at the at this level, which was the candle signal, and this week this price has shot up. So goodness me, quite a few pips in there, probably 300, something like that, maybe a little bit more, 300 pips. Obviously, the next test is the 50 simple moving average on the weekly chart, but we'll see how that pans out. A lot will be down to Brexit news that comes out and about next week. The other weekly chart trades that I have on is Australian dollar, US dollar. So a similar kind of setup. Just ignore the yellow box that relates to a lower time frame strategy, range strategy, because I can play. Let's undo that. So I can play both shorter term and longer term strategies at the same time. That's fine. So basically here, this was the entry signal on the weekly chart, and then this week we've had bids, so we've traded up. So yeah, profitable trade currently in Australian dollar, US dollar. So continue to hold that, providing we get the momentum that I'm looking for upwards. Australian dollar CAD. Is the other weekly trade that I am in. Yeah, this was the entry signal. This started out the week reasonably well. We traded up here. This was a profitable trade. We got some Canadian dollar positive employment news. I think it was Thursday or Friday. So finished the week down here. But you know, this position is not under threat at the moment at all. Nothing for me to worry about too much. This is the 5 and 3 year low, so expecting more bids off that next week, and possibly a move back up into to this level. Australian dollar, US dollar is strong. The reason that this closed down on the week is that US dollar CAD, Canada pulled back some strength, pulled back some offers towards the end of the week. So now into my trading time frame, where I trade most of my positions, like the other 4 strategies. This is what pound US dollar cable looked like last week. So this was the positive news on Brexit. So it was push all the way up, bids all the way up. Probably some profit taking here at the end of the week. Euro, US dollar. This was a trend trade strategy. So basically, what happened here on this 240 chart. We'd got the cross here, the 10 exponential moving average crossed above the 50 simple moving average. This was still pointing down, the 50 simple moving average. So there was no room really to get too far below the before running into the 200 simple moving average, which was sloping down. So what I did, I waited for a close above that here. I missed that entry signal. I took the next candle here, which tested but then closed back above, so got a slightly better price than I would have done on this candle. Traded up, hit my initial targets. Off that initial target, we're now trading down again. I've got my stop at entry. That is now a risk-free trade. Australian dollar, US dollar. This is a Golden Gate strategy. So yeah, what happened here, we closed. This is range strategy, so I only play this on a range trade. So this is depicted by the yellow box. My range assessment of Australian dollar, US dollar is the 1, 2, 3 touches here, touch here, touch here, touch here. So looks like a range is in play. I do think we're bullish on this pair, which I am in the long-term time frame. But yeah, got close above the 200 simple moving average. So I bought off that. We traded up, pushed back down. We traded up, pushed back down. So finished the week pretty much where I entered. So yeah, we'll see what next week brings. US dollar CAD. This was the employment news. So this is this is what I talked about a second ago. This was the positive employment news on Friday. I didn't enter this trade based on the news. I entered this trade based on the signal. We got the close below here. 10 exponential moving average closed below the 50. Couldn't enter here because the 50 simple moving average was sloping upwards. Once we closed below here on this strong offer candle, below the 200 simple moving average, that was the signal. So I entered here. This trade finished the week in positive territory. Looks like we may have triggered the stops under this level here, where shorter term time frame traders probably had their positions, and I'm looking to see if we can push back down into this level. If I jump out to the bigger time frame here, if we could get back down to this 3-year low, that would be a nice profitable trade. But as with anything, you never know. So yeah, holding that position, and I'll get out, take my exit signals if things start to move against me. Then into synthetic pairs, Euro Swiss franc. So this was a Golden Gate strategy, similar to the Australian dollar strategy. Range on this pair. I identified a range on this pair on the basis that we had a touch here, a touch here, a touch here, a touch here, a touch here. So when we got this crossover here on the 240 charts, basically we closed above the 50 and 200 simple moving averages on this candle. I missed that entry. I got in here. I got in here. Here, this candle. And then pretty much it was all bids all the way up to hit my target. Roll my stop to entry, and now holding. This looks like, in fact, we may have moved. Oops. No, we haven't. So we haven't closed above this level here, which is the high of the range. So we're still in range mode, but there's every chance we could push up further next week into and close on one of the days next week with this pair. If we get the close above here on the daily chart, we're then into no longer range mode, but into bullish territory. But as always, we'll see how that pans out. So that's really an overview as to how the week has gone. I've done some of the weekly market analysis already in preparation for Monday, and a bit more to do, which I'll do tomorrow. But yeah, although it's been a tough month and a bit, a tough time, I am confident in the strategy, and you've got to continue to trade even though there's drawdown, but you've got to manage those losses and be ready to take advantage of the opportunities when they do present themselves. Closed doors, I'm a fool for your love.